SoundHound AI stock just keeps dropping. Is it over for the company? Should I sell? Well, in this video, I'm going to answer those questions, and in addition, I'm going to go over some recent news, relevant market data, and I'm going to finish by giving you my prediction for SoundHound stock going forward. As always, this isn't financial advice and it's for entertainment purposes only. Alright, so SoundHound just released a new QSR, or quick service restaurant customer. The brand is called Church's Texas Chicken, which, as you guessed, is a fried chicken joint with roots in Texas, but now has more than 1,500 stores across 22 countries. So despite its name, it appears to be a global brand, much like KFC. SoundHound will be offering its voice AI technology in the company's drive-thrus, just like some of its other customers like White Castle. I'm not sure if this is going to be a global partnership or some sort of pilot program, but it's a positive development and shows SoundHound's expanding footprint in this sector. With this piece of positive news though, you might have expected to see the stock finish in the green. However, SoundHound is down more than 4% today. What's going on? Well, for me, the answer lies in the price action. After going up 60% last week, it is entirely normal and perhaps even desirable to see some form of retracement. In my last SoundHound video, I expressed my desire for the stock price to consolidate around this zone, and so far it looks like it's playing out. This is a very good outcome because it shakes out weak holders and traders who are going to sell anyway, and allows the hodlers, or long-term believers, to accumulate more shares at a discount. After a brief period, the selling should dry up and the stock will be able to rise again as the balance tips back in the buyer's favor. One thing that I should mention though is that key insiders have been selling shares. In fact, even the CEO, Kevin Mahaja, has been cutting his SoundHound holdings significantly in recent days. Over the past week, Mahaja converted some of his options to stock, which he sold for more than $12.5 million. Now he still holds more than 2 million shares, but that is still a significant sell down by the founder and CEO. When someone like this sells shares, it's never a good look, especially just before they're due to appear at a conference where they're meant to be promoting the company. Maybe this is why the company sold off on Wednesday. Whatever the cause, I'm sure Kevin had his own reasons for selling shares, and it's not like he dumped his entire holdings. I'll be keeping a close eye on this going forward, however. Another important piece of news was the CPI report that was released on Wednesday morning. Both the CPI and core CPI came in at 0.3% month over month, which is exactly what the doctor ordered. This was the best outcome for the markets because if it was higher, then inflation worries would have reignited, and if it was significantly lower, worries of an economic slowdown would have spread, leading to bearish sentiment in the stock market. This CPI report all but paves the way for Jay Powell and his team to cut rates yet again at the last FOMC meeting of the year, which is going to be held next week. This is going to be a crucial meeting because it'll include the dot plot. Now, the dot plot is basically a chart showing where the committee members think the Fed funds rate will be over the next 18 months. If their expectations have shifted since the last dot plot, it could have significant implications for markets. Anyway, I think the Fed will probably cut rates, and here's what Tom Lee had to say about it.
Today was a day where the odds of a December cut increased, the probabilities are now solidified, and that's actually bullish for tech.
Because the CPI was, some would say sticky, but it was largely in line. Is that how you read it?
Yeah, that's right. And I think it's allowing, the CPI print today allows people to imagine a path to 2% because shelter now is cooling to a level that's in line. Auto insurance, which was at 25% earlier this year over year, is now down to 13%. So the two biggest contributors to CPI are in a downshift. I don't think the fact that used cars are going up is going to reverse the Fed's view. I don't think the Fed's going to tighten because used car prices are up.
All right, so Fed's cutting next week. That's your base case?
Yes.
All right, moving back to SoundHound's chart, let me propose 3 pathways that the price may take over the next few days. The bearish case is if the stock keeps falling. Now, if this were to happen, the price could fall all the way back down to the prior high at $10, which would now be acting as support. Now, this would mean a more than 30% correction from the high of $16, which is quite a sharp correction. Am I going to sell if this were to happen? No, I'll continue to hold and see what happens after. The stock might bounce off this support level, so I'm not going to sell at this price. The neutral case is if the stock stops falling from here and sort of stabilizes in price, maybe rising a bit on Thursday and Friday. This would be the ideal scenario because it's relatively benign and not likely to lead to any drastic price changes. In fact, this is my preferred case and what I think is most likely to happen. After such a sharp move up last week, I think now is a good time for the stock to consolidate and catch a breath before moving higher. And of course, the bullish case is if the stock recovers sharply in price on Thursday and Friday to finish the week substantially higher. If the stock were to rise 30% from Wednesday's close, that will bring us to nearly $18, which sounds good, but remember, that means that the parabolic price trajectory then comes back into play, potentially leading to a pump and dump type of ending. But again, I'm expecting the neutral case to play out over the next few trading days and don't expect to see all that much volatility. Of course, this isn't financial advice and anything can happen. On a related note, there has been quite a dip in some of my small cap growth stocks, with companies like Archer Aviation and Intuitive Machines falling significantly from their recent highs. So maybe this is a market-wide thing, who knows. But I'm quite bullish for the remainder of the year because we've got the Fed meeting next week, followed by the Santa Claus rally, which usually happens in the final week of the year. Tom Lee seems to agree.
I think investors should realize 2024 has been a year of surprising strength. The market has avoided so many opportunities for weakness, and now we're entering the final weeks of the year where we know there's still $7 trillion of cash on the sidelines and quite good visibility in next year. So I think stocks should finish very strong.
So with everything said in this video, I think it comes as no surprise that I will continue to hold on to my SoundHound shares. I have no plan on selling them anytime soon, and I hope it stays that way for a long time to come. But do you hold SoundHound shares? Let me know in the comments below. And if you like this video, please hit the like button and subscribe to my channel for more SoundHound videos. Thanks for watching and see you guys next time.